Discover high income and diversification with closed-end funds, or CEFs. We'll now focus on 10 notable CEFs, often sought for their higher yield potential, examining their operations, outlooks, specific risks, and unique opportunities. Remember, all yields are approximate as of mid-July 2025. CEFs are publicly traded funds that strategically invest across various asset classes. They actively manage their portfolios and often distribute substantial income, though their market prices can trade at premiums or discounts to their underlying asset value, creating unique entry and exit points for investors. Here is your in-depth, independent overview of 10 diverse CEFs, generally known for their higher income potential. 1. Oxford Lane Capital Corp, OXLC. This fund currently offers a yield around 17.0%. Its operational strategy involves specializing almost exclusively in investing in the equity in junior debt tranches of collateralized loan obligations, or CLOs, with the primary goal of generating very high current income. Its general outlook is highly dependent on the performance and default rates of the underlying leveraged loan markets. However, investors should be acutely aware that its primary risks include significant sensitivity to leveraged loan market performance, high complexity, the often illiquid nature of CLO tranches, and the substantial leverage inherent within the CLO structures themselves. The main opportunity lies in its very high income potential derived from this specialized, often less understood asset class, particularly if credit quality in the underlying loans remains strong. 2. PIMCO Dynamic Income Fund, PDI. This prominent fund offers a yield of approximately 13.9%. Its operational strategy involves actively managing a highly diversified global fixed income portfolio, including less common and often higher yielding assets like non-agency, residential and commercial mortgage-backed securities, high-yield corporate bonds, and emerging market debt, typically employing significant leverage to enhance returns. Its general outlook is closely tied to global credit market trends and the trajectory of interest rates. It could perform well if credit spreads tighten or if PIMCO's tactical positioning is successful amidst market volatility. However, its high leverage can substantially amplify both gains and losses. Opportunities often arise from PIMCO's renowned expertise in navigating distressed or specialized credit markets, potentially uncovering unique income streams. 3. Guggenheim Strategic Opportunities, Fund GOF with a yield around 14.5%. This is a multi-sector income fund pursuing a flexible, top-down allocation mandate across a wide range of fixed income credit and alternative investments, frequently utilizing substantial leverage. Its outlook appears promising if the manager can effectively adapt to rapidly changing market conditions and capitalize on relative value opportunities identified across diverse income-generating assets. Yet its high leverage inevitably amplifies volatility, and its performance is highly dependent on the manager's successful execution of their macro views. Opportunities typically stem from its ability to source high income from diverse, less correlated assets, and its potential to perform exceptionally well in volatile markets due to its agile and active strategy. 4. PIMCO Corporate and Income Opportunity Fund, PTY. This fund yields approximately 12.5%. Its operational focus is on actively managing a diversified portfolio of primarily investment-grade and high-yield corporate bonds globally, though it maintains flexibility for other debt instruments. Its general outlook is closely tied to the health of corporate credit fundamentals and the broader interest rate environment. It could perform well in a scenario of improving corporate profitability and stable rates. Key risks include the inherent credit risk of corporate bonds, sensitivity to interest rate fluctuations, and the impact of its leverage. However, significant opportunities can arise from PIMCO's deep credit analysis capabilities, allowing it to identify and invest in undervalued corporate debt amidst various market cycles. 5. Nuveen Short Duration Credit Opportunities Fund, JSD. This fund yields around 9.8%. Its operational strategy focuses on a diversified portfolio of primarily short-duration, high-yield debt instruments, aiming for high current income while concurrently seeking to reduce sensitivity to interest rate changes. Its outlook could be favorable in a rising or stable interest rate environment due to its shorter duration, especially if credit spreads remain attractive. Risks include the inherent credit risk of high-yield issuers and still some, albeit reduced, interest rate sensitivity. Opportunities often arise from its ability to provide high income with comparatively lower interest rate risk compared to longer duration bond funds, particularly benefiting from a robust corporate credit market. 6. Calamos Convertible and High Income Fund, Shuri, CHY. This fund yields around 10.8%. Its operational strategy involves investing in a blend of convertible securities and high-yield corporate bonds, aiming for a balance of high current income and capital appreciation. Its general outlook appears favorable if both equity and high-yield bond markets are constructive, allowing for both growth participation and income capture. Risks include the inherent credit risk of high-yield bonds and equity market volatility impacting convertible values. The primary opportunity is its unique hybrid strategy, which can potentially provide both equity upside and high current income, offering a distinct risk-reward profile. 7. Western Asset Mortgage Defined Opportunity Fund Inc. This fund has a yield of approximately 12.1%. Its operational focus is on investing in a diversified portfolio of mortgage-related securities, including non-agency residential mortgage-backed securities, RMBS, and commercial mortgage-backed securities, CMBS. Its general outlook is highly dependent on interest rates, housing market trends, and the credit quality of the underlying mortgages. It offers high income, but carries significant credit risk and interest rate risk within this specialized fixed income sector. Opportunities exist in capturing high yields from the complexities and unique characteristics of the mortgage-backed securities market. 8. John Hancock Income Securities Trust, JHS. With a yield of about 8.8%, this fund invests in a diversified portfolio of income-producing securities, including high-yield corporate bonds, senior loans, and other fixed income instruments. Its general outlook could be promising if the broader credit markets remain strong and corporate default rates stay low. Key risks include the inherent credit risk from lower-rated bonds and loans and sensitivity to interest rate changes. Opportunities stem from its diversified exposure to various income-generating credit sectors, managed by an established firm, providing broad credit market access. 9. AllianceGI Convertible and Income Fund, NCZ. This fund yields around 10.5%. Its operational strategy involves investing in a blend of convertible securities and high-yield corporate bonds, seeking a dual objective of high current income and capital appreciation. Its general outlook is often favorable if both equity market performance and high-yield bond conditions are constructive. Risks include the inherent credit risk of high-yield bonds and equity market volatility, impacting convertible valuations. The core opportunity lies in its ability to potentially provide both equity upside participation and high current income, offering a balanced approach to risk and reward. Pataude. BlackRock Enhanced Global Dividend Trust, EBOE. Providing a yield around 9.0%, this fund invests in a diversified portfolio of dividend-paying equity securities globally, utilizing a covered call option strategy to generate additional income. Its general outlook could be favorable if global equity markets experience moderate and steady appreciation, allowing for both international diversification and enhanced income. However, risks include global market volatility, foreign currency exposure, and the inherent limitation of full equity upside participation due to the covered call strategy. Opportunities include broad international equity exposure combined with additional income from option premiums. CEFs, particularly those with higher yields, offer diverse strategies for income and diversification. Remember, these higher yields often correspond to increased complexities and risks. This information is for general educational purposes only and not investment advice. Yields are approximate as of mid-July 2025. Always conduct your own research, review fund documentation, and consult a qualified financial advisor for personalized guidance. Thanks for watching.